Welcome to TradeSpoon. My name is Lakar Pell. I'm CEO and founder of TradeSpoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions and then answer any questions you might have. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. All right, Dr. Simon. Or is it Simon Doctor? I think it's Simon Doctor. But welcome. Any other questions? Let me know if you guys can hear me or see my screen. Just type in. All right, so let's start. Welcome to TradeSpoon. My name is Lakar Pell. I'm CEO and founder of TradeSpoon. Today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. Disclosures are very important. Please read them. If you're new to trading stock or options, or if this is the first time you see these disclosures, I encourage you to visit optionscreen.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into trading psychology, let's talk about current market conditions. Dr. Simon, were you able to get a hold of Keith? I saw you schedule one-on-one consultation. So just an announcement, please. If you do have time, try to spend time with Keith. He's our chief investment officer. Has been trading for a very long time. He has a lot of experience. So you can go to support, dedicated support, and schedule consultation. Right? I think it's 25 minutes of good investment. Renata is back. All right. I haven't seen Renata for a while. Renata, welcome back. Jean is here. All right. So again, interesting week. I think in live trading room, I asked a question, right? Top events this week, right? That impacted the market. Again, one is the earnings kickoff. Strong, I wouldn't say strong banks, strong regional bank. Regional banks are doing well. Major banks are actually has been under pressure, right? Especially with that 10% credit card rate that's effective January 2026. Sparking fear, squeezing banks. So you do see banks, right, like JP Morgan's of the world. Under pressure, right? And the entire sector, right, XLF, has been underperforming despite the, kind of a de-escalation regarding tariffs, de-escalation with the European Union. Regarding Greenland, banks are not recovering, right? So this is definitely putting impact on banks. Contributing to the underperformance and broader caution. Dow Jones, Department of Justice probe into Fed Chair Powell. I'm not sure how much uncertainty or impact it has. I don't think it does. Macro data has been supportive. GDP data was, positive yesterday. And then tech and AI broader rotation. So definitely Russell 2000 small caps are showing strength, right? And NASDAQ relative early performance, rotation into value industrials, broader index holding up. So I agree, right? So you do have that theme of rotation where before mega cap technology stocks were leading the market since the 22 recession. Now it's a small caps, right? Small caps made new highs this week, despite uncertainty in the market. Value stock post new high, emerging market post new high, and QQQ. I think looks like it's going to be flat compared to the past, since October, right? technology stocks are just consolidating, going into the earnings season. Right? The next week and next 2 weeks, we're going to have Microsoft, Meta, Apple, Palantir, Google. All the AI stocks are going to start announcing earnings, and that will shape the rest of the earnings season. So far, QQQ looks like it's closing, on a positive note. So that's good. So that's QQQ. What else is interesting? Obviously, the most important are rates. Right? We briefly broke through this downtrend this week when there was escalation. Now, after the escalation, we actually looks like a week low. We're closing at the low, so that's good. Because if the Trump at the Davos conference did not back off, the rates would continue going higher, right? And that would put a lot of pressure on the market. I think, his advisors told him that it's midterm elections and you don't want the people, lose money in the stock market and question affordability. So I think he backed off because of that. A little bit earlier, I actually anticipated a little longer, but it was kind of one of the shortest disputes. Okay. Basically, it tells you that uncertainty persists, market is going to be choppy, and you want to have cash, right? You want to have cash, and where you have these pullbacks, you can add to your long positions. VIX is kind of turn around, right? We're back from 20 level back to 15. Right? So again, low risk, low volatility, value stocks continue to grind higher, spider slightly higher, and the main support and resistance levels are at SPX 6900. We're still trading above 6900. Basically, haven't gone anywhere since end of October. For the most part, market is flat. If you look at the gamma, support is at 6900, right? The gamma flip point is 6900. That means that market makers will be supportive of the market as long as we're trading above that 6880 level. And major overhead resistance is at 7000, right? Most of the positions, open interests is at 7000. So it's going to be, you need some positive momentum to break these 7000 level. So let's see. Let's go to this future rehearsal exercise, right? It's important to So you need to know how much money to put in risk, right? Based, on your view on the market, and whether you're holding position for a few weeks or a few days or a few hours, the same exercise could happen, right? You can look at the options data, even if you don't trade options data. You can look at the supply and demand and determine, probability of stocks being in a certain range, right? So here I'm looking at the basically February, March, end of March. So you have 7100. So I mean, about 7000, right? 7000, 7100. You have that level. So kind of this bar. So scenario number one, we're going to break this level and trade 7100, 7150. right? Inflation is continuing to go down. Employment is still relatively stable, right? I mean, there are signs of weakening of employment market, but initial claims continue to be under 250,000, so unemployment is not jumping, and we had a revision to the downside. So employment is stable, inflation is down, interest rates continue to go lower, and next couple weeks, Microsoft and mega cap technology stocks are going to hit a home run. We have broadening of participation, more small caps, value stocks continue to go in higher, even though not a strong momentum behind a lot of stocks. They are overbought, but nonetheless, scenario number one, we're going to break through the 7,000 and keep going higher, maybe 7,100, maybe 7,200. Scenario number two, we're just trading below these lines, right, based on the options data. 6,700, right? You see some support, 6,700, 6,800, and we're trading in this scenario. Right? So we're trading somewhere between 6,700 and 7,000, 7,100. Maybe marginal break of 7,000, but then false breakout, and we're back. And scenario number three, we revisit in November, October lows, 6,500, 6,400, right? Flare up in escalation, right? Maybe we can't get along with China now, or we can get along, or more, caps. We already have. There was a executive order on the salaries of aerospace and defense companies. Now 10% on credit cards. Large institutions can buy housing, and that piles up, and more companies being affected, and we're going into recession. Unemployment rate may be jumping, right? Scenario number three. So trading is probability of possible outcomes, right? Then you basically say, okay, I think 70% of the time we're going to trade in this level. So as we approach in 7,000, I raise cash. As we approach in 6,700, I put my cash into work. And you can do this exercise whether you're a short-term trader or a long-term trader. Right? So how many of you say one? Up and away. Do you guys hear me? Let me see. Well, the sound is working. The video looks like it's working. I hope you guys can see my screen. Just ask questions. But how many of you say scenario number one, we're going higher? Scenario two, no, if you don't break 7,000, we're going lower again. So scenario number two, and how many of you say scenario number three? Renata, thank you for participating too. BJ, you always have opinion. Dr. Simon, Michael, Andre. One. All right, one. Okay. I'm going to go with two. I think market is overbought. You can see kind of it's been choppy, and these escalations can happen any time. I understand that we are midterm election, and ultimately Trump is not going to push any agenda too far. But I think we need a bigger pullback first before we're going to have move to the upside. So I think February, March, we're still trading scenario number two. And my opinion is basically very easy. If we're still staying below 7,000, I'm market neutral, and I would raise cash. If we break 7,000, at least stay there for a week. Okay, then I can deploy some of my cash, but I would not chase the market at these levels, right? I would wait for pullbacks, right? So that would be my approach to the current market conditions. And you can use options data. You can use the gamma exposure. You can do it if you're doing day trading. You can look at the 0 days till expiration options. You can look, and it will show you supply and demand. It will show you which strikes have high open interest, and those are the levels that the market is going to trade. Stock forecast toolbox. This is our main model. You can enter any ETFs, right? Stocks, and it will analyze, right? So if you look at small caps, model basically tells you, Okay, we're in strong uptrend, small caps up, up and away, right? You look at QQQ, you look at the spiders or any other stocks. Okay, we're kind of in a downtrend, right? We're still kind of in a downtrend. So I like to use this model. It gives me predicted support and resistance, gives me a view for the next 10 days, right? Model does not see a breakout above 7,000 or 700 on SPY. On the downside, I mean, you can see that potentially we could revisit the lows, this week lows, and and beyond. So, and then you can zoom out for 6 months, and then the model will basically tell you this gets updated only on the first of each month. For this month, January, it predicted 680 support, 700 overhead resistance. This was done on December 1st, right? Sorry, on January 1st, it's January 23rd. Model is doing a good job seeing that that's the range, right? At 680, you buy, 680, 675, you buy, 700, you sell, right? You trim. So I agree with the model. If you want to see which sectors are leading the market, or you can enter your own stocks, like today for active trader model detect. We also have a model that basically finds top 3 opportunities for each day, right? Active traders for each day, and then weekly traders for each week, right? It gets posted every Sunday. Active trader gets posted every day. So today CBOE, right? So it detected CBOE. If we buy at 275, or 277, right? Depending on market conditions. So right now we're at 275. Close, you wait for 15 minutes, right? Usually I would wait for 15 minutes if you're doing short-term aggressive trading. Or if you're not, once you see a stabilization, okay, and you think CBOE that uptrend is going to continue, then you enter the trade, right? Especially if you want to hold it longer, right? So that would be the active trader, right? And you can enter this into your portfolio. It will tell you, okay, 274, consider buying, 280, consider selling, right? And same thing for spiders, 288, maybe buy, if it gets to 696, sell, and so on and so forth. WMB is another signal. So these are the signals. You can have your own portfolio that you can watch, and you can go to company screener to find, same thing, it gets posted. The data gets updated on the 1st of every month. You can see, banking, especially regional banks, are in strong uptrend. Aerospace and defense are in uptrend. Semiconductors are in uptrend. Energy company are in uptrend. And this data gets updated on the 1st of each month, right? These long-term trends. And you can drill into them, right? You can drill into electronics. Well, which electronics? Looks like printed circuit boards. Flex. Probably should have looked at on the first. How's Flex doing? Okay, kind of neutral. Okay, what else is interesting? Let's see. And then if you go back. Company screener. Let's see. Well, that's minus 62%, but circuit boards, diversified electronics, another one. Oh, memory chips. Okay, here we go. Semiconductors, memory chips. Broadcom, Micron, right? So you can see Micron. So this was posted on the 1st of January, right? So that was, that's Micron is doing well. How's Broadcom? Broadcom is sideways. Okay. So, but these are the ideas that you can use in the stock forecast toolbox, right? And then I already mentioned active trader. You can trade these signals using stock. It gives you entry point, and it looks for 1% target gain or stop loss, right? So if you buy right now, if you decide to buy 275 or 1, then the idea is to exit with 1% move to the upside or to the downside, and you hold in position for a couple days. Right? This is ideas, 1 or 2 days. Sometimes I trade these signals, I hold it for a week, sometimes for 2 weeks, but then because I see that short term it has an uptrend, and then maybe that uptrend continues to go higher. A lot of people use it just for day trading or these short-term trades. But these are the signals that get posted every day, and if you decide you want leverage, then you can always go into options. You'll get the same signals, but here you can trade weekly options, expire today. If you know weekly options, there'll be a monthly options. You can decide, no, it's one day is not enough. I want to use next week options. So then you would pick next weekly option. But same idea. Instead of buying the stock at 275, you can buy 272.5 call for $3.35, and that's your 275. Right? I mean, there's some time premium, but again, you try to capture 1% move. So options obviously leverage. If you buy at 3 and sell 6, then you're making 100% return on your investment, or you wait or if it drops to 55 cents, then you exit out. But using 1% move on underlying stock. So these are the signals. Sometimes people ask questions. Well, what if it never hits 275, right? What do I do? Or what if it gives up? If you're not sure how to trade signals, the idea of these signals is for somebody who has a trading plan. If you have a trading plan, we encourage you to use these signals, whether you're a day trader or maybe longer term trading. If you don't have a solid trading plan or written down trading plan, you're still not a mechanical trader, you're not a, rinse and repeat, you're still not confident, then I encourage you to go to contact, schedule a one-on-one consultation with Keith, right? At the time convenient for you. You see a different schedule here. And spend 20 minutes talking to Keith. He's our chief investment officer. He's using these models to trade. And that's where that would be the approach, right? So I encourage you to do this consultation with Keith. He's a great guy, very knowledgeable, worked at hedge funds, worked as market maker, and he can help you build a trading plan. He can help you kind of make the best use of the tools. Also, you can participate in Elite Circle, right? This is a great way to learn how to trade and how to build a trading plan and see how Keith and I are trading, right? Every day there's trades, right? Today, I close QQQ hedge, right? I close QQQ hedge. I'm trying to get out of the General Electric iron condor. Some of these are stock positions, some of them are option positions. So the idea is that you can, let's see, I did Morgan Stanley or JP Morgan. I haven't traded stock for a while, but I do have stock positions. Right, like Pelletier, I have Pelletier. So you can see both stock and option trades, right? You can participate in live trading room. You can watch the recordings. So this is a great way to learn and follow exactly how I trade, either being in a live trading room, or you can watch the recordings, right? Every day there's open bell and closing bell, and you can watch us trade and learn, right? And you can also add a phone number or Discord ID, and you will get SMS messages or Discord messages. And this trader log is available to everybody. You can real-time synchronize with portfolio. You can see all of our positions real-time. If you just want options ideas, premium portfolios where I trade, Morgan Stanley was the signal this week, right? So I'm going to get into Morgan Stanley actually by end of today. So you have one trade idea here in Morgan Stanley, and then you also have Elite Circle, where you see all ideas. Premium is when you only do options. Robo Investor is when you only trade stocks, right? This week was Moderna, right? So you have one stock trade idea a week. So robo-investor, premium portfolio is where stock options, spread trader is kind of, you only get access to premium, and shadow, you only follow all of my trades. So that's what we offer at TradeSpoon. You can follow our trades. You have different services. We give you these analysis and live trading every day. And if you don't need hand holding, you have a good trading plan, then these are the signals that you can use, either short-term signal or long-term signals based on our AA model or stock forecast toolbox. All right, guys, it's 10 o'clock. That's all I have for today. Thank you for participating, Alan, Andre, BJ, Gene, Michael, Renata, Simon. If anything, contact us. I think talking to Keith for 20 minutes is a great use of your time, and he can help you with the trading plan, walk you through the best use of tools. And I hope to see you in live trading room. Thank you very much. Have a great week, and I'll see you soon. Thank you.